Good morning and welcome to our Fireside Chat keynote conversation on competing fairly for the lowest latency wireless connections. It is my absolute pleasure to welcome our two speakers for this discussion, Stéphane Tyč, co-founder of Quincy Data and McKay Brothers, and Doug Cifu, CEO of Virtue Financial. Gentlemen, the floor is yours.
Okay, welcome to this presentation. I'm Stéphane Tyč, co-founder of McKay Brothers and Quincy Data. And McKay Brothers provide wireless networks between data centers, and Quincy Data uses those wireless networks to provide the lowest latency market data. Our subject today is the recent decision by the Securities and Exchange Commission, the SEC, about the fairness of accessing the data centers. But maybe before we dive into that, let me allow me to introduce Doug Cifu, my co-host for today. Doug is the CEO of Virtue Financial, and here we go, Doug.
Stéphane, thanks very much for having me. Yes, I'm a co-founder like you and CEO of Virtue Financial. We're a global financial services firm known foremost for our electronic market making capabilities in U.S. equities, but globally, we provide markets in 25,000 different financial instruments in 250 marketplaces around the world. And we also have a very large scaled institutional client services business, execution services business with a variety of financial products. And we have been a very happy business partner and customer of McKay for a long time. And Stéphane, it's always been interesting to do business with somebody that we respect a lot, that has a degree in physics and all that kind of stuff. And I'd learned from you that the physics building at Harvard was named McKay, and that's why you named it. So it's given me credibility with the physicists at Virtue. So I want to thank you for that.
Well, thanks very much, Doug. I wasn't expecting that much of a great introduction for us. So really, today we're discussing the last point of entry of those wireless networks in the data centers. And what we're discussing today is a decision that from the SEC that really comes about because Virtue filed a comment letter in 2019. So perhaps you can tell us a little bit about this.
Yeah, thank you. It's very, very kind of you to say. And for the record, I don't have an issue with exchanges. I'm not anti-exchange. This isn't personal, right? So it's really, as they said in The Godfather, it's just business. But if you take a step back, right, the way I visualize what has happened to financial markets around the world, but in particular the U.S. equities market. So go back in time 30 odd years ago, there was this thing called the New York Stock Exchange, right? Located in Lower Manhattan. And there was this thing called a trading floor. And there were posts where specialists stood, and you had market makers and other brokers that stood outside the posts, and they would hand signals and screaming and whatnot in order to get their orders in. And the specialist stood on the trading floor, and he was disseminating market data, right? Because he would be talking about prices and he would take orders, and that's how transactions in the U.S. equities market largely took place, with some exceptions, but that's kind of how it works. So that was the trading floor. Roll forward, and that's how it was for 200 years. Started under the Buttonwood Treaty, evolved indoors, but effectively hadn't changed all that much. Roll forward 30 years to call it the early 2000s, and then obviously today in 2021. And markets have evolved. Technology and automation have largely replaced that kind of manual function with data centers, servers, and switches, which house matching engines, right? Think of that as the specialist post, the trading floor. And then around them would be market makers and other participants, brokers, folks that wanted to trade for their own account, whatever it is. They would rent space, and they are renting space in the data center with connectivity to the specialist or to the matching center. So if you will, the trading floor, right, has been transported to Secaucus, to Mahwah, and to Carteret. That's where the three large exchange groups are, and actually now the smaller exchanges as well. So when I think about an exchange and kind of what happened, if you go back to 1980, would it have been permissible, Stéphane, for a specialist to say, you know what, you're going to stand right there, and I'm going to charge you $5,000 a month because you're going to stand right in front of me, and you're going to get access to something before the guy that stands behind you, right? You're going to be a big burly guy, and you're going to block out, the vision. and you're going to pay me $5,000 a month for that. And the guy behind me, he can pay me $100 because he's going to get, market data and information about trades a second later because you're going to take all the good trades, right? That's the way I envision what has now happened in data centers. So if you think about an exchange, what it really means, it's, to me, the entire facility of the data center, right? And I happen to be burdened with being a lawyer, right? So I went and looked at the Securities Exchange Act of 1934, and it talks about the facilities of an exchange. And so if you think about it, right, because the exchanges have evolved so much since 1934, what's really the facilities of an exchange? It's not just the matching engine, but it's how you get how you communicate into the exchange. So it's the rooftop, it's the access, etc. So in my view, just as a fundamental basis of fairness, an exchange should not be able to monetize in a biased manner access to the exchange. It's no different than if they sold a spot in the old floor to some big burly dude for $5,000 so he could trade advance of everybody else. So that was my fundamental kind of epiphany. And that's when I decided, like, hey, this is an issue that really needs to be addressed. Sorry for the long introduction, but I kind of wanted to put it in context.
That is certainly helpful. And then, so that's the new floor of the exchange here that we can
Right.
see, the NYSE data center in Mahwah. And the specialist pool that is being sold for $5,000 a month is the NYSE on-prem private pool that you can see.
Exactly.
And the little guy sits outside in the street, and the little guy is, you and us and everyone else that.
I mean, look, we're not little guys. No one's gonna, no one's getting out of violin for Virtu and Citadel and all the other firms. We have plenty of resources, right? And there's certainly an arms race around latency that we're all involved with. Right. And you can make arguments whether that adds economic value or not. It sort of doesn't matter. It is what it is. We are in that predicament. Right. And so we all are. And my view about at Virtu has always been, we just want there to be a level playing field. Right. Virtu has never been about or made money because of some market structure advantage. That's what kind of drove me crazy during the whole Flash Boys thing and whatnot. Like, there was this perceived either technological or information asymmetry that was benefiting the Virtus of the Citadels of the world. It's actually the opposite, right? As the market maker, you don't have information, information comes at you in the form of orders. And so the notion that the exchanges would have this private pole that sits on, in there, this is in Mahwah, New Jersey, right, off of Route 17, that they can charge a premium price for, right, and not provide equal access to for commercial providers like McKay, that just made no sense to me. It was inequitable, and I think it violates the Securities Exchange Act, and that's kind of our point of view.
Well, and we totally agree with you, obviously. So if you look at this picture, then the yellow line was the extra fiber length that we had to traverse. And essentially, the SEC decided that the NYSE would have to coil and equalize to that fiber length. Now, why do you think they thought they could get away with it, the NYSE?
Well, I don't think. I don't ascribe like surreptitious motives to them, right? I don't think that they are bad people. I don't think they act nefariously. I think they do an amazing job and invest millions of dollars in a very redundant, low latency environment, right? For the record, right? Jeff Sprecher is a once in a lifetime type of CEO. He's a visionary. He's a strategic leader. And so it's an amazing organization that I have the utmost amount of respect for. But they're business people, right? And so they recognize that they had something of value that could be monetized, and they take a very different view than I do as a legal matter, that the rooftop is part of the facilities of the exchange. I think by analogy to the trading floor, and that's the example I gave you with the specialist and the big burly dude in front of it, the specialist, I take the view that is the case. And the SEC, fortunately, the prior Jay Clayton, who's a highly respected, used to be a practicing attorney, and Brett Redfern in trading and markets, looked at the issue when we brought it to their attention, candidly, through our comment letter, and they agreed with us because exchanges have evolved in the way that I articulated into these data centers, and so the notion that an exchange that has qualified immunity and has effectively a medallion and has a little bit of an oligopoly around market data and gets SIP revenue, all the great things that exchanges get, the quid pro quo for that is effectively providing equal and fair access to all facilities of the exchange, right? And this little yellow squiggly line is not equal and fair access, right? So if you're going to have a data center, the simple answer is they should have a public, I mean, you're much better at the physics and the engineering of it, Stéphane, than I am, but they should have a public pole or rooftop that everybody, including Mackay or Virtu, if we want to do it on ourselves, we can rent and they can make money off of it, right? It just needs to be a licensed fair amount of money or regulated fair amount of money. They can't privately sell a speed advantage, which is what everyone's complaining that they do, to disadvantage, frankly, your company, which has done a great job of really taking, really what you guys have done is you've kind of commoditized the latency market through your engineering and through your hard work. And so you should be able to continue to do that and not be disadvantaged by effectively a government sanctioned monopoly on speed.
Well, I thank you again very much. And I have to recall something, remind you something. We went, Bob and I, to see you, I think like 6 years ago. At a time when
was I nice to you?
Exactly.
I hope I was nice to you.
Well, let me tell you, we weren't exactly sure how to survive and how to, establish a good business. And we were looking to see if you might want to be a shareholder. Right. And, you took us into the office. It was very nice. You looked at us and you said two things, essentially. One, I have no interest. You had no interest in becoming a shareholder. Your business is trading, making markets. And two, you were so happy that we did exist. So we came out and we thought, well, he's happy that we exist. That's great. But he doesn't want to have any part in us. What's the message? And I think the message was great. And now, 6 years afterwards, I have to thank you for that.
Well, it's not, I would phrase it a different way. I actually, if I was more articulate, I probably would have said, you know what, it's not in your best interest for me to be an investor, right? Because really what you're trying to sell, which you've done a great job with, is, as I've said, I'll call it like, commoditization or access to latency in a fair way with a fair price. And you want to be able to sell that not just to Virtu. So Virtu is a shareholder. Every other one of our competitors or anybody who wants to be a market participant would look at that and say, I don't know, do I really want to do business with somebody that, Virtu, whether Virtu is going to get an inside advantage because they're a shareholder on the board and blah, blah, blah. So you kind of had like a little bit of a conflict. And I understand why, we're a big consumer of this product. So it might have actually made sense. Maybe I would have been a better businessman to say, all right, Stéphane, I'll buy 40%. You guys can keep the rest. Here's a lot of money, but I want to write a first refusal and I want a latency advantage or something like that. Like, I didn't do that because it's kind of not my style to do that. And, we viewed you guys as never a competitor, right? Because I never wanted to be in the telecom business, if you will, but we always have a decision, like, do we do it ourselves, right? Or do we, pay you guys effectively to engineer a path for us? And so we've done both. Right? And your challenge has always been to thread that needle and price your product in a way that you can make the most money out of it, as you should, right? Because I'm a capitalist, I believe in that, but not charge us so much that we get irritated and we go do it on our own, right? And I think you guys have done a really nice job of balancing that and frankly not gouging and pissing off the industry. But I congratulate you on your success and wish you continued success. Yeah,
that's great to hear. But now, so the SEC has ruled on that, but I think NYSE doesn't really want to recognize those facilities. So do you think NYSE has a point? Because I think they're trying to argue that the SEC has too broad an understanding of what facilities are.
Yeah, I mean, I think this is
NYSE's view.
Yeah, I mean, I think this is part of a larger, play that's going on, or a larger, theme that's going on between the exchanges more broadly and the SEC. I mean, I think I give Jay Clayton all the credit in the world. I mean, I think he was an amazing chairman because he actually got things done. They tended to favor my point of view, so maybe that's why I liked him more. But he didn't he did what he thought was right, and around market data, around connectivity, and around what I would call fair access. He really went at the exchanges and said, listen, this setup that you have, where we have this thing called the SIP, and you kind of control it, and it's $400-500 million of effectively a tax on the industry, that needs to be democratized and opened up. And the way that you're selling connectivity in a discriminatory manner is not consistent with this notion that for qualified immunity and for this medallion, you effectively have to be more of a utility and have a regulated overview by the SEC around your pricing of all of fair access and the facilities of the exchange. It's no different in my mind than what the public service commissions or the public utility commissions do with the power companies, right? Like, we all need electricity, and Con Edison, or whoever it is, and who, I don't even know if they're called Con Edison anymore, right? They can't just set their rates wherever they want to set them. So there has to be a demonstration of the cost benefit analysis as to what they can charge per kilowatt hour, right? In my mind, the quid pro quo for the exchanges of having the medallion, the qualified immunity, and all of access to all the SIP revenue, et cetera, is that all of the other things of the trading floor, connections to the trading floor, so whether it's fiber, whether it's wireless pole access, whether it's market data, all of those things are part of the facilities of the exchange. And so therefore, it is within the SEC's mandate, as promulgated by the Congress in the 34 Act, to have all of those be fair and reasonable. I think that's the language I'm paraphrasing from the 34 Act. And so therefore, it's totally within the SEC's purview to review those things. Obviously, the exchange is not just NYSE, but the exchanges take the opposite view, that the 34 Act is not as broad. I'm not surprised by that. I think they're wrong. I used to be a partner at a big law firm, and so I read it and studied it and talked to another bunch of other good lawyers. I didn't go back and look at the legislative history, and I'm very hopeful, Stéphane, that the DC Circuit, which is where this will be heard, will agree with me.
So actually, there's a weird little thing here, because it seems that NASDAQ seemed to agree that the wireless connections were facilities of the exchange, because they filed in 2012.
Yeah, it's interesting. I don't know that they, I want to be a little careful how I say this, because it's the subject matter of existing litigation. I don't know who's ultimately going to see this. I'm not sure that they were as aware of kind of like what that all meant and where it was all going. And I think they, looked at the rooftop and said, well, we're going to just provide access to this rooftop in a fair manner. This was maybe 2000, as you said, 2012, whatever it was. And ultimately, that didn't, I think it was more fiction than fact ultimately, right? Because you don't really have a competitive situation down at Carteret either. I think New York, candidly, was more aggressive about it. And I think, I don't know what the words we used are, but when they went to the town of Mahwah to get permission for this poll, I don't want to say they intentionally misrepresented, but I don't think that they were fair dealers, I would say, in terms of what their intentions were with that poll outside their facility. So I think, it's, I'm trying to weigh, the two exchanges against each other. I think ultimately, they all kind of subscribe to the same theory. I think New York, frankly, was just more aggressive about it.
Well, that's interesting, because I would have said this a little differently. So NASDAQ in 2012, when they filed, we filed a comment saying that, maybe they were organizing fair competition between their clients, but it was certainly unfair to us. Like, we couldn't compete with them. And as a matter of fact, like, it took us 6 years before that was, after that was approved, to re-enter the market. And we had to develop a completely different technology to be able to compete with them. So I don't think they were super fair to us. I think they were probably fair to you. But really, they gave arguments to the SEC that, to me, made no sense. I think they were good lawyers, probably. And, lawyers are great for presenting facts in a way that helps them. So one of the things they said is that they had no control over the roof of Cartwright, and that competitors could go and ask Verizon to install on the roof. And obviously, everybody would want to be on the roof. And that was in 2013 that they said that. And in 2021, nobody's been able to install on the roof. So I think they were a little misleading. And I see that the SEC could have agreed to their filing at the time just because, they didn't really explain what they were doing.
Yeah, I would say, number one, lawyers do make arguments all the time that they don't necessarily believe in. Guilty. I used to do that for a living. And number two, I think they were a little cute by half. I think they tried to, and this is, look, they're great people. Adina Friedman is a good friend of mine, and Tal Cohen is, I think, one of the best in the business, right? So I have a great deal of respect for them. We work extremely collaboratively with them. And I want to say this as nicely as I can. I think they don't like pissing off their customers, which is a good thing to do, right? We pay them a lot of money. We pay New York a lot of money. And I think they were much more sensitive to basically saying to Virtu and to Citadel, who were two large customers, and to Goldman Sachs and to all the other banks, basically screw you, you can't come on our roof, it's private, right? Which is kind of a little bit what the New York poll was doing. So I think they took a more nuanced approach to it. That being the case, I think they wanted to be the purveyor or the salesperson and keep you out, right? Because they kind of probably viewed you as a nuisance at best and maybe a competitor at worst in terms of being a telecommunications wireless provider, right? Because they kind of wanted to be in that business because it's a nice high margin business to be in. And, they want to sell their market data and their wireless market data between, et cetera, et cetera. So they kind of viewed you guys as a competitor, whereas firms like Virtu and Citadel that pay them 8 figures a year, it's probably not good business to, irritate us too much, right? So if they entered into this, they don't own the Carteret data center. In fairness to them, it is a rented data center, and it's not the best data center in the world. It's not like Mawa, which they have total control over. So I think, they tried to walk that fine line, to be more fair to the market participants, which, I got to commend them for, right? Everybody dislikes you because you're just a nuisance. I at least pay them, Stéphane. That was sarcasm. I know you're French, so sarcasm sometimes is a little more nuanced.
It works.
It works. Okay, good. Just checking.
Oh yeah, you should have seen my T-shirt. I had the, the Big Bang Theory T-shirt. Sarcasm.
Okay. Yeah. Well, you're a physicist. You love that show. Yeah.
Of course.
Yeah.
So, okay, I take the sarcasm, but there are things that are hard to explain with what NASDAQ did. So they essentially let ATC build a tower on the premises, which is pretty much like the poll, but the tower was welcome for everyone. And the only issue with the tower is that they coiled it to death to make it just unusable. So everyone else that wanted to compete with them had to build the little poles on the side of the data center to go around the tower that they built. So, they're very different from NYSE. They don't have direct control over everything. They have, in many ways, plausible deniability,
right,
which as lawyers is great. But I don't think it was very amicable for us.
No, I said, I think they were kind of trying to be too cute by half, right? I mean, I think, they took themselves a step away and they could say, listen, not our data center, and we have this third party provider called ATC, and so we're trying to be fair that way. Again, I think if you take a step back, my point of view is more clear, I guess, and more direct, which is, I think the data center, if you're going to be an exchange and you're going to put your gear in a data center, that's the floor of the exchange. So everything about it is part of the facilities of the exchange, and you need to provide open, you need to have an engineering solution that provides open and fair and competitive access. You can charge for that, right? You should make money on that. You should make a fair margin on that. Tell us what the costs of that are. But effectively, you're the engineer, I'm not. I don't know if that means like a giant pole in a parking lot and everybody, gets like 5 feet so they can put their dishes on, or a couple of poles, and then you have, fiber that is exactly the same length that feeds into the matching engine, something like that. I mean, that to me makes a lot of sense. I mean, there are other exchanges around the world where I have had confidential conversations where they would come to us and say, hey, listen, we're thinking about moving. what's the right fair way to do this so that, you know, our clients aren't spending hundreds of thousands or millions of dollars to, like, you know, to buy some potato farmers, you know, to buy 20 square feet in some potato farmer's field that happens to just be serendipitously, you know, next to a data center, so that some company can put a pole up and all of a sudden, you know, the potato farmer is, you know, gets millions of dollars and everyone's rushing to fight for the potato farmers. I mean, that's not good for the industry, right? It gives us a bad reputation. It's not, it's kind of a waste of money on everyone. The only guy who benefits is the potato farmer, I guess. It doesn't really help marketplaces. So maybe I'm being a little too naive, but you would think that ultimately exchanges that want to kind of make the markets better and more transparent would engineer solutions that are more egalitarian, that they can make money for. And a lot of the criticisms and a lot of, frankly, the bullshit, like this lawsuit, is just a complete waste of time. It's a waste of money and a waste of time. It's not business. We're not doing business. We're fighting over stupidity where the New York Stock Exchange is trying to make money that they shouldn't be making, right? There's a fair way to make money. It's not a fair way to make money. They're not being square dealers, in my opinion. So it's a colossal waste of time. I don't like paying lawyers for it. We just filed an amicus brief with you guys where we had to pay a lawyer to do this. Great lawyers. You know, to me, that's just a colossal waste of time. I'd rather donate that money to a good charity than piss it away on amicus briefs about, you know, literally probably, what is this, 2 milliseconds we're talking about, or actually probably 9 microseconds or something like that. So, you know, it just kind of gives the entire industry like this, like, black eye of, you know, look at all these people spending all this money over 9 microseconds. What the hell are we all doing here? And you know what? No one's really wrong when they say that.
Yeah, and there are really great examples of people doing it right. The CME, Eurex, like there are tons of good examples.
Yeah, the CME did a really nice job when they moved to Aurora, trying to make it more fair and egalitarian. I mean, and that's, you know, I give Brian Durkin, who retired, a lot of credit, because Brian took that as one of his initiatives. He's a really wonderful man and a good human being, and he wanted it to be fair for all of his members, and that's what they accomplished.
So I guess really what it boils down to is, as long as they don't favor anyone and organize a fair and equal access, we're fine. Competition will do their job.
Yeah, I just think it's bad business. I mean, if that was me and I had Mawa, I would have been like, all right, I'm going to set up like a row of poles here, and I'm going to try to sell as much space as I can, but I'm going to offer it to Mackay and to Virtu and to Citadel and everybody else, and I'm going to charge them, you know, $27,500 a month or whatever it is, but we could probably, that you could justify what your costs were, et cetera, et cetera. You make the filing, and you're making hundreds of thousands of dollars for putting a couple poles up. And all this bullshit, frankly, wouldn't have happened. So I don't know why they didn't do that. I don't know. You know, they're not asking me, and I don't work there, and I never will work there. So we're kind of talking about nothing.
You know, let's hope the LSE and Euronext, when they move, adopt that new model.
Yeah, I think so. In Europe, everything's like, you know, egalitarian, right? Isn't that kind of the socialist way over there, Stéphane? So I think it'll be fine.
Well, I think continental Europe maybe, but probably not London yet.
Okay, right,
you know,
right.
We just hope the LSE gets the whiff.
Okay, yeah.
That's things right.
You know what? They're under the microscope now. They did a big transaction, so I would imagine this will be small potatoes. So hopefully, they'll do the right thing and not try to piss people off.
Exactly. Well, Doug, it's been great to have you. It was a great conversation. Thanks a lot.
A real pleasure. Thank you, and I appreciate the opportunity.
And no hot dog notes, or?
Everybody wants to talk about hot dogs. Yes, I do love hot dogs. For all the viewers, there's a great American company called Feltman's, Coney Island, run by a couple great West Pointers, veterans, 100% veteran owned, best hot dogs you'll ever eat. So go to www.feltmans.com and buy yourself some hot dogs, and don't forget the mustard.
All right, you had to say that. Thanks a lot, Doug.
Thank you, Stéphane. Always a pleasure.
Same here.
All right.
Bye.
Good seeing you. Cheers.
Thank you, gentlemen, for a fantastic conversation. Now, if any of you viewers didn't get a chance to have all of your questions answered, Stéphane is going to take some time starting right now to answer those questions in the networking break just below. So please feel free to click on the link for the roundtable, which he'll be a part of, and you can start to have that conversation there and ask your questions. Thank you so much for watching.